In this question, you are being asked to find the value of the company's closing inventory of engines at the 30th of April 20x6. The information provided tells you that they value the inventory of engines using the FIFO, first in, first out method. They tell us how many engines they had at the beginning of the year. So on the 1st of May 20x5, they had 700 engines in inventory that were valued at $190 each. They then show us the transactions during the year, taking us up to the 30th of April 20x6. In order to be able to work out the closing inventory at the 30th of April 20x6, we should work through the information chronologically to look at the movements of purchases and sales of inventory throughout the year. For this, I will set up a working. For each movement in inventory, I will look at the number of items that they have, the value, and the total. Starting at the beginning of the year, they told us on the 1st of May they had 700 engines in inventory valued at $190 each. Therefore, the value of that inventory would have been the 700 multiplied by the 190, which gives us $133,000. They then tell us on the 1st of July they purchased some more engines, and they purchased 500 at $220 each. And so I will add those to my working. The next transaction is on the 1st of November, where they sold some of the engines and they got rid of 400 engines for $160,000. What we're interested in is the number of engines that they have sold, because this is what's been removed from our inventory. We know we are using first in, first out, and so when selling these engines, they would have removed the earlier stock. Therefore, the 700 that we had at the beginning of the year, we're going to take 400 from. This will leave us with 300 engines left, and we'll be using the value of $190. Therefore, putting that in my working, on the 1st of November, I've sold 400 engines. I'm using the 190, and so the total removed is $76,000. My next transaction is on the 1st of February. We have purchased some engines, and this time we've got 300 engines purchased at $230 each. I am adding these goods to my inventory, and so I'm going to put on the 1st of February x6, 300 engines, $230 each, and this will total $69,000. Finally, the last transaction is on the 15th of April. They've made a sale and they've sold 250 engines for $125,000. Again, what we're concerned about is how many of those engines have been removed. We've got 250 engines removed from inventory. Using the FIFO method, we would take the earlier inventory first. We can see our opening inventory, there were 300 engines at $190. And so we're going to remove 250 from that batch. That will then leave us with 50 left there. And so on the 15th of April, x6, we've now sold 250. Cost is 190. And so the total value of cost will be $47,500. In order to work out our closing inventory, we will then add up this list, taking our opening inventory, the additions, and taking off the sales throughout the year, and that will leave us with a value at the end of the year of $188,500. Looking at the options that we have available to answer, we can see that our second option is the correct answer.